Hi guys, this is Wave 618 and it's the 5th of March 2018 and it's currently 4:45 in the evening GMT. Alright, so I want to do an analysis of the US dollar chart today. So first of all, just want to say, as usual, thank you to the new subscribers. The channel is growing really well. It's only been up and running 2 weeks now, and the subscribers are coming in faster and faster, so it's really nice to see. It's glad to see that I'm doing something that's helping the trading community, so thank you. Alright, so this chart, I really want to break it down for you. I've got a lot of labels on the chart here. I'm going to explain absolutely everything for you. Sorry, I'm currently full of a cold, so if I'm not coming across very clearly, I apologize for that. Alright, the US dollar chart, probably, in my opinion, the most important chart to understand in trading. This chart controls everything, the economy, other currency pairs, when a recession will happen. So a really important chart to understand. So I've been studying it for quite a while, and I'm just going to break it down for you today. So, alright, first of all, as you can see, quite a symmetrical pattern developing here, and when you see symmetry like that, it's always best to see whether you're getting a repetition of what happened before. So I've color coded these bottoms here, so and this is the RSI down below, so you can see the corresponding levels. Now, first of all, the RSI at 25.8, that showed very good support, so I just want to show you that. So good support at this low, good support at this low, and then it did actually break it here, fell slightly short of it here, but again it's made really good support again. Yeah, so a good reason to think that this may well be the low of the dollar here. So that's basically just to demonstrate the symmetry there, as well as the RSI being very significant. Alright, so I'm just going to start from actually back here. It's actually all the way back in 1992. So my count. So first of all, there's going to be some quite complex Elliott wave patterns that I'm going to discuss here. And if you're able to understand what I tell you in this video, you're going to find it quite easy to understand Elliott wave, because I'm going to talk about some complex patterns here. So bear with me, I will break things down. I'll be explaining things as clear as I can. But as I say, it is going to be complex, and if you do understand it, that's brilliant, because it means that you will pick it up really quick. All right, I should just close that one. So first of all, my count here, as you can see, I've labeled a load of expanded flats, and I'm going to explain to you how the US dollar chart loves these expanded flats. They're absolutely everywhere. One of the more complicated flat patterns, which is a corrective pattern in Elliott wave, and people don't usually see them straight away. It takes a while to really get to see them, and the only way you can really confirm it is a expanded flat is using Fibonacci. So not just Elliott wave, you've got to use Fibonacci to confirm it. I see a lot of trading analysis done on YouTube where people aren't always plotting the fibs, and the fibs are needed to just confirm those patterns. All right, so let me show you my count. So I believe this is a 1, 2, 3, 4, 5 pattern. Now you can see that wave 4 crosses with wave 1. Yeah. Now this means it's a diagonal pattern. Another complex, more complex pattern in Elliott wave technical analysis. So I will explain these diagonals as well. So that's my count basically. I'm going to explain to you why I got these ABC expanded flats. So when I say you need Fibonacci to confirm these expanded flats, typically C will be a corresponding Fibonacci extension of wave A. So if we just say wave 1 came up to here, then you've got, this is all a wave 2, this ABC pattern. So wave A came to here, and then wave C, which started up here, you can see it comes down to the 2.618. Yeah, a very well recognized Fibonacci level, and it gives validation to the expanded flat. So that's that one. Then I've got a wave 3 coming up to here. Now this wave 3 was not extended, it's equal to wave 1, so I'll just show you that. So that's the top of wave 1. Bottom of wave 3 is down here. Okay. So A is actually, this is this A there. Okay. So wave 3 finished here. And then you got a new ABC. So I'm just going to, I shouldn't have deleted that one. A, B, C, and we'll just change the way that looks. Sorry, bear with me. I'll just change that again. Okay, that'll do for now. And if we just zoom in on that, so that was A. Sorry, B actually comes up to here, and then this is C. So it's a little bit more fiddly without zooming in to show you this one. But if we try and do a fib extension, so we're saying this small wave was the A, B was a running flat up to here, and then again the C wave is a 2.618 extension. I'm sorry that's not very clear when we're zoomed out like this. Alright, so wave 3 was up to here, then we got our wave 4, so this was A, that's how it should be plotted, that's the ABC right there, and this was the wave 5. Now, as I say, this was a diagonal pattern purely because wave 4 is overlapping with wave 1. Alright, now let me just explain a little bit about diagonals. I've got something prepared over here, just explaining everything. So, a lot of people find diagonals a bit complicated, so it's important to note that diagonals, where do they occur? So they occur in impulse waves and corrective waves. So the only places that they occur in an impulse wave, which is a 5-legged pattern, is in wave 1 or wave 5. Yeah? They're not in wave 2 or wave 4, and they're never in wave 3 either. Okay. Now in the correction, they're either in wave A or wave C. Now depending where they occur in the wave, they're labelled as a leading or an ending diagonal. So if it's wave 1, we call it a leading diagonal because it's at the beginning of the wave, and if it's in the wave 5 is the last part of the impulse wave, so we call it an ending diagonal. Yeah, it's as simple as that. And the same applies with the ABC. Wave A is the start of the correction, so we call it a leading diagonal, and wave C is the end of the correction, so we call it an ending diagonal. Now this is what you can expect to see with a diagonal. So you can see the converging lines, and they're both going in the same direction. Okay, and these are your 5 waves up. They're overlapping, so wave 4 overlaps. Well, it doesn't really overlap in this case, but it absolutely can do, and that's not a problem. Usually with an impulse wave, we say it's invalidated when wave 4 overlaps wave 1. However, the exception is in diagonals. The other important thing to note is each leg, so wave 1, will be made up of 3 waves. So it's a 3, 3, 3, 3, 3 subwave pattern. Yeah. So the same principle as with triangles. You get the same thing in a triangle. You get 5 legs of 3. Okay. Now, a lot of you may be thinking, what's the difference between a triangle and a diagonal? And it is very important because triangles typically occur in waves 2 and 4. Yeah, these are your corrective waves. And it's very important to know which wave you're in, so it's important to differentiate triangles and wedges. So a wedge is a diagonal. So, so let me just show you what a triangle is. So a triangle both lines are either coming together, well, one's going up and one's going down, or one is flat and the other one is rising, or one is rising, so one is coming down and the other one is flat. Yeah, as soon as both waves are going down or up, it becomes a diagonal. Yeah, so that's a diagonal. That's a diagonal. Okay, that's the differentiation. It's something that a lot of people overlook. I see a lot of traders overlooking this very important differentiation between diagonals and triangles. It tells you what wave you're in. Alright, so that being said, let's go back to our chart. I'm going to take the RSI off now just because I've explained that one already. So if this is a diagonal, tell me, is it a leading or an ending diagonal? Well, look at which way price came in. It came in from above and then it's going back on itself now. That means it must be a leading diagonal. Yeah, it can't be an ending diagonal because it's at the start of the correction pattern. Yeah, so if this is a leading diagonal, you have to now ask yourself, is it corrective or impulsive? Yeah, well, it can't be impulsive, because if this is wave 1, then this would be wave 2. Now wave 2 is finished lower than wave 1, so it can't be impulsive, which means it must be corrective. Yeah, so this is an A wave. Yeah, has to be an A wave, which means this has all been a B wave. Yeah, and we're now in wave C, which I believe is going to come up to here at least, and I'll be explaining. Let's break it down a little bit further. So wave B is here. So let's use a Fibonacci tool here. So I'm saying the end of this wave B is an ABC pattern. It's A, expanded flat, ending here in a B, and this is C. Yeah. So if A finishes here, wave C starts here, 0.618 extension of wave A. Yeah, that's why it's so important to use fibs, just to confirm that these fibs are being hit. Yeah, because if you get a fib level like this, the 0.618 is very significant. It's a very significant extension. So it validates the fact that this is a turning point. Alright, and as I say, this ABC, so this is an ABC. The B wave is made up of an ABC itself, and I've labelled it there as an expanded flat. Again, if we just use our fib, so that's wave A, and wave C is 1.618 extension of wave A. Yeah, so again, a very important fib level, bounce right off it, and it confirms the expanded flat. So wave B finished here. Yeah, this was A, this was B, and now we've got C. Now let's do the wave count for wave C. So in an ABC, the C leg is also 5 waves. So I make this to be wave 1. End of wave 2 will finish here. Okay, and I've got wave 3 coming up to here. Yeah, the 1.382. Or you could argue it finished at the 1.618. However, because the dollar loves its expanded flats, I believe it's finished here. So you've got your ABC, you can see another expanded flat, and if we just do our fib level, this is the bottom of wave 3. So assuming this was the top and it wasn't an expanded flat, just assuming, and it may well be the case, it may not be an expanded flat, this one. It has retraced 50%, hence it's found really good support, because this would be a wave 4. And wave 4s typically will not retrace more than 50%. If I just label this 1, 2. So let's say 3 finished here. 4, 5. So let's get rid of this expanded flat. It may not actually be an expanded flat, in which case, as you can see, this is the wave 3, and it's retraced 50% and found resistance, and I believe we're going up from here. Also confirmed by this RSI, as I explained at the beginning of the video, bouncing off that important level. Yeah, so that explains why I feel that we're going up from here. In terms of how high we're going up, so if this is all a major ABC, let me just label the larger picture. So this is A, B, C. Let's make this large. Let's show the wave. Now, it may not come as high as that. It may be what we call a running flat. And a good target, I think, would be if we drew a parallel line to the lows here. I did that from there. We could project price going up to here, in which case this ABC would be described as a running flat. Reason being, price came in this way, we've got A wave, B wave going beyond where A started, and then C wave finishing lower than wave A. Having said that, it could be an expanded flat, because as we know, the dollar chart loves its expanded flats, in which case you could find the C wave coming up to here. Yeah. So very complex. I've been counting the waves and I've been using fib levels. There's a lot of expanded flats that aren't so obvious. I believe this is the bottom here using RSI, using fibs and using Elliott wave. So I've combined everything there. And yeah, so and as you can see, there is a lot of symmetry in this pattern. Yeah, we're essentially at this point, at the point that we're in 1998. Yeah, that's the point that we're in right now. So that was 20 years ago, and we're about, I'm assuming that we're going to at least hit this line. Next target will be up here. Yeah. All right, so I'll leave it at that. It was a very complex video, I know. I will try and do some tutorials where I'll be explaining things, you know, certain patterns in a lot more depth. So hopefully that will be useful. It's a really important chart to understand, just because the dollar controls so many of the markets. If we know the dollar is going up, then that helps us trade Forex. It helps us trade commodities. And it tells us where the economy is going in general. Now, if we were, for example, if the dollar's going up, my suggestion, and I think the best chart to probably trade, would be the euro dollar. Reason being, just because it's completely spiked, the euro dollar. Yeah. So if the dollar's going to go up, yeah, that's going to bring this price down. Yeah. And this has got a long way to go just because it's spiked. Yeah. When price comes up so fast like that, then it can come down very fast as well. Yeah. So euro dollar is an excellent short in my opinion. That's what I'll be looking out for. Alright guys, I hope that video has helped. As I say, it was complex. There was a lot of Elliott wave explained in there. But that's the forecast for the dollar. I believe it's going up, and I believe it's going up sharp, and it's going up for a good amount of time. Alright, obviously if, let's just go back to that chart. So if it breaks this level, I would be concerned, because it means it would be tracing across that, retracing further than that 50% level, and so wave 4s typically don't retrace more than that. So I would be concerned if it retraced more than this. However, as long as it's holding here, I would be very bullish the dollar. Alright guys, I'll leave it at that. I hope it's been useful. Please like, subscribe and share if you want to see more of my videos. Alright, take care.